Alrighty, guys, so it looks like we had another green day in the stock market today. We had the Russell close up 1.3%, the NASDAQ went up 1.5%, the S&P went up 1%, as we had the Dow go up 0.6%, the VIX pretty much broke even, and we had gold down 0.6%, and silver got nailed, down 2.2%, and last I checked, Bitcoin, Ethereum, crypto in general was doing well right now. Bitcoin is up, let's see here, 6% almost on the day. It is at 20,800, and we have Ethereum right around 1130, up 7.5%. We have, what else we have here? Cardano, XRP, pretty much everything's up. The entire crypto market's up 4.1%. So in this video, we got a lot to break down. You guys know the deal. We're going to go over charts, stocks, earnings, and of course what I'm doing in these markets. So sit back, relax, and let's just dive right into it. So like I mentioned, we had a very strong and nice solid green day out there, and like I've mentioned before, right, we're probably gonna have there's a good chance we do have a couple of green days in a row here, but overall the bears in the grand scheme of things are still in charge. So just because, let me just start the video off like this, just because we're having some nice green, I don't want to rain on your parade, guys. I think overall the Bears are still in charge, and I'm still sticking to that. So what we're noticing here, and I kind of touched upon this in my previous video, SPY is still trading in an ascending triangle. We did not break out of 378 yet, 379, which is a big resistance, and we have triple Q. Let's see here if that's still in the triangle. It looks like it is. Yeah, look at that. We're not fully breaking out on triple Q, and yes, it did take out 285. It got to about 285.70-ish, which is a good sign, but we're not full-fledged breaking out yet. Now, if triple Q gets maybe to 290, 295, it starts breaking out of there, okay, now we're talking. That's a different story. But overall, in the grand scheme of things, on the 4-hour chart, we're still downtrending very clearly, and this is just a little relief rally. That's all it is. And SPY, same thing. I mean, look at this. SPY still clearly in a downtrend, and it's just simply, this is simply based on the charts, as of now, a relief rally. And you guys can see on Russell, the Russell as well. Same exact thing. It's just seeing a bit of a rally. And we have the Dow Jones playing out, obviously, very similarly here. So let's go over now, because I don't want to, repeat myself over and over with the indexes. Let's talk a little bit about crude oil. We haven't covered this in a couple of videos, so let's see where this is at right now. It went down about almost 2%. Wow, almost 2% on the day. Crude oil is right around $104 a barrel. And look at this trend line I drew out a couple of videos ago. We clearly have fallen under that trend line now. Is the uptrend completely broken? No, it's not. Not quite yet. And it's honestly not even close, really. I mean, it is kind of close to breaking a short-term uptrend, looking at these past couple of months. But look, even if, let's say, hypothetically, let's say we hold $100, right? Let's say crude oil, which as of now it is holding $100. If we look at these previous lows, look, I'm outlining them for you guys. Are we not holding higher lows right now? We technically are, right? And let's say crude oil starts falling under maybe 90 a barrel into the 80s, okay, that's going to be a very big break in trend. But right now, based on the way things are looking on the 4-hour chart, we're still technically uptrending. And I feel like $100 a barrel is that point where we have to hold. And 90, 95, especially 90, 95. So keep your eyes on crude oil. We're at a very, very critical spot right now. And when it comes to, let's see here, I'm not going to cover Bitcoin and Ethereum in this video, guys, because I am a little bit on a time crunch. We are going to be going out last night in Ohio tonight, so I'm a little bit on a time crunch. So I guess we can just dive right into the earnings, which I do want to cover some earnings in this video because we got Rite Aid, we got FedEx, we got Darden restaurants. So before we actually do that, if you haven't done so already, get your free stocks from Moomoo. You could get 10 stocks, each up to $2,500 with a $100 deposit. Use that link down below. That's how you get the free stocks. And on top of that, you could also get some free money from Webull. I think it's 6 stocks. Yeah, 6 stocks from Webull with any amount deposited. All of those free stocks, again, are linked down below. And I think those promos run out pretty soon here, end of June. So get on that. Again, 6 stocks from Webull, 10 stocks from Moomoo. And with that being said, let's just dive into it. So Rite Aid is the first one that I want to go over. This one kind of, the move yesterday foreshadowed the earnings a little bit. You know, the solid earnings that we got today, it seemed like, right? We had a big move in Rite Aid yesterday. I think it was up 8-10%, something like that. And now today, Rite Aid went up 20%. Tack on another 20% to the upside, guys. It closed up over $8 a share. So right now, Rite Aid is completely breaking out. It's above the moving averages, and we're clearly at a multi-week, multi-month high, and we're approaching $8.30, 40, 50 cents, which was support in the end of February, pretty much all throughout the beginning of April. So that now is a big resistance, and I feel like we will get selling pressure around $8.50 in the short term, maybe profit taking, whatever you want to call it. And if Rite Aid's able to come down towards $6.87, that's where I would consider picking up some shares. So right now, Rite Aid is breaking out. It's a little overbought, like I said, and that's on earnings. This big move came on earnings. EPS of negative 60 cents versus negative 70 cents. So they beat EPS on revenue. Get this, guys. Pretty nice beat. $6.01 billion versus $5.75 billion estimated. So double beat for Rite Aid, and they see full year 23 sales of $23.6 to $24 billion versus $22.91 billion estimated. So nice guidance for full year 23 sales. Nice double beat. And if you guys take a look at this chart, and I've covered this before, this stock has been destroyed. So we got some good news after being down from $20 a year ago, and it just hit $4, $5. This is great news. It's gonna cause a big pop in the short term. Maybe even, I guess, could you call this a short squeeze? Maybe. I'm not sure what the short interest was or still is on Rite Aid, but maybe there are some shorts covering today. Who knows? So big move today. Nice move for Rite Aid. Darden Restaurants also reported pretty good earnings. I've covered this company many times on the channel. They own restaurants such as Olive Garden, Bahama Breeze, Capitol Grill, Yard House, the list goes on. And they reported $2.24 of EPS versus $2.21 estimated. They beat EPS, and they beat revenue, $2.6 billion versus $2.54 billion estimated. And they see full year 23 same-store sales up 4 to 6%. Q4 same-store sales came up 11.7% versus the 9.2% estimated. So, yeah, I mean, or estimate rather, if you guys, if you want me to talk proper English here for you all. So this is a pretty good report, honestly. Double beat. They did well on same-store sales, which is very important for restaurants, and they beat, or rather they guided up for same-store sales. So this is good. And the stock on the day, surprisingly, only went up 0.4%. I figured it had to have gone up a couple percentage points on that report, but it didn't, guys, and it's still under the moving averages. So for now, I'm going to just put my alert at $120 here on Darden. 120 mark is at or above. That's right by the 50 moving average. If that point breaks here on the 4-hour chart, maybe we start a reversal process from there, but by the looks of it, guys, we're nowhere near that point. So keep that in mind. Be careful. DRI, it's not quite yet out of the woods. The next one here, actually, let's go to FDX, which is FedEx. They also reported. I forgot. FDX closed down 0.4% on the day, and I actually haven't seen these earnings yet. They reported as I was prepping this video. So let's see here together. They did $6, it looks like. Or no, wait, am I seeing that wrong? Oh, no, I'm not. $6.87 adjusted EPS. That came in line with the estimate. And it looks like they missed on sales, $24.4 billion versus $24.57 billion estimated. I'm not seeing anything here. FedEx says unable to provide a fiscal 23 EPS or ETR outlook. That's not good, I guess. But then later it says here they see full year EPS of $22.45 before to $24.45. Yeah, I'm not really seeing any clear-cut revenue guidance. I do see a little bit of adjusted EPS guidance here, which I'm not noticing what, or I can't see what the estimate was. But overall, it looks like for the quarter, adjusted EPS, $6.87, that came in line, and they missed sales by about $17-ish million or something like that. So I guess that's not good. But overall, we had a rally last week, if you guys recall, when FedEx ended up hiking their dividend out of the blue. It was a big hike as well. I think 50% hike in their dividend. So this started seeing momentum last week, and it's actually up right now after the bell. The stock closed at 228. Now we're at 234. Big pop after the bell. So I'm going to dive into that report more probably later tonight, or maybe, when I get back from Ohio. We're leaving tomorrow, guys. I'll probably look more into FedEx. But overall, technically speaking, it looks like we have a bit of a cup and handle here. If we take 240 out, I'm still sticking to that. We might be going 255, 60 after that, maybe 265 if things get really hot, which, who knows, it's possible. So FedEx, I wouldn't say that was an awful report. I wouldn't say it was obviously a great or even a good report. I would be like, it's not the best, just looking from those brief numbers. So let's talk about some other stocks before I do wrap the video up. Guys, if you all are finding value and you haven't done so already, hit that like button and make sure to subscribe. It really helps me out in the YouTube algorithm, guys, and I do appreciate you. As always, without you guys, this would not be possible. So EPAM is one that I'm looking at, ticker symbol EPAM. This one up 6% on the day. And look at this. With today's 6% day, we broke out of not only the 50, but also the 180 moving average here on the 4-hour chart. That's good. And now we're solidifying pretty much the continuation in this channel, and by the looks of it, this could start moving towards 350 plus, 350 to 370. That's the next big resistance range that I'm noticing here on this chart. 370, we hit that back in early May. We hit 345 in the beginning of June. So that's where this could be going on this breakout. So I like EPAM a ton right now. Merck is another one that's ripping like no other. I mean, Merck today went up 3.2%, ripping out of these moving averages. And I'll mention this, it is a little bit overbought, so keep that in mind. But if Merck could come down low 90s, high 80s, 88, 89, 90 roughly, right by the moving averages. Let that RSI cool off a bit. We retest those moving averages. We get buyers there. Maybe we start making that push towards the mid-90s. And who knows, we might make that push towards the mid-90s without even pulling back. It could happen. I mean, look at how this stock has V-shaped recovered in the past couple of days. I mean, this is freaking insane. Another one that looks similar is UNH, but it's not full-on breaking out yet, full-fledged breaking out yet. It's not there. But you guys can see the downwards channel here, and we're right by the 180 SMA and the highs from late May. If we do break out of 500, I'd say 505, 510 especially, that's where this could really start taking off. So right now, I actually kind of like UNH, the chart, more than Merck, especially if it starts breaking out. So if we do take 510 out where I put my alert, 550, 545, 550, that's where I can see this potentially going here. And mind you guys, I'm not a financial advisor. I don't know what's going to happen. Even financial advisors don't know what's going to happen. And quite frankly, there's nothing really special about financial advisors at the end of the day. But they don't want you to know that. We're not going to get down that rabbit hole in this video. But overall, the moral of the story is do your own research. Please, please, please do your own research when it comes to the market. So the last stock that we're going to talk about in this video before I wrap this up, it's going to be Duke, guys. Duke Energy. Haven't talked about Duke probably in a year or two on this channel. I mean, I can't even remember the last time I talked about it, but I saw it today as I was prepping for this video. And the chart looks pretty good. This 4-hour chart, you guys can see we're holding higher lows. We're making a nice bounce. V-shaped recovery kind of looks like it, right? Today it went up 3%. But if you look at the longer-term time frame, you're like, aha, look at this. This looks even better. It's clearly holding the uptrend, holding the 180 SMA. And in times like these, people are buying up utility stocks, safer, quote-unquote, investments. And the PE on this thing is roughly at 21 right now, trailing 12 months. So by no means is Duke Energy cheap, But it looks the chart looks good. If people continue running into these value stocks, which is definitely possible, even though the P ratio now for a lot of these companies shows they're no longer value stocks. It's funny, right? A lot of things have flipped. Now, Facebook's a value stock, right? It has a P of an 11. You know, it's funny, but people might still buy Duke. I think, you know, the chart looks strong. They have a 3.9% dividend yield, which is great. I mean, literally, you're collecting money for pretty much just holding the stock, doing nothing. Now, yes, you do have to pay taxes, and there is double taxation going on with dividends, which I talk about a lot. But a 4% dividend, hey, you can't really complain. And I'm sure Duke Energy has done fairly well year to date. I bet you maybe it's not up year to date, but it's got to be almost flat. Yeah, look at this chart. It started off the year right around 100, 103 bucks, which is where it is now. And if you're flat year to date and paying a dividend, you're vastly outperforming the market year to date so far, comparing to the S&P, the NASDAQ, the Dow, literally every index, right? So I guess with that being said, guys, we can wrap the video up. If you all enjoyed it, you know what to do. Smash that like button, drop me a comment, and make sure to subscribe. And feel free to join my Patreon if you guys want all my buys, sells, call-outs, morning videos, more access to me throughout the day. That's linked down below. Or you can go to StockSurfS.com/Patreon. And don't forget to get your free money, 10 stocks from Moomoo with a $100 deposit, and you can get 6 stocks from Webull with any amount deposited. All of that is linked down below. You could also get 40 bucks off Seeking Alpha Premium if you want to join Seeking Alpha Premium. That's linked down below as well. And with that being said, I'll catch you guys in the next video. Thanks for watching as always. Peace out.